Good morning, everybody. Good morning, everybody. This is the live market open for March 30th. It's a Wednesday. We're back to the original hour in London, original hour also in Central European time, but now with an hour shift, it's 7 GMT. I see quite a few of you in the room already. I'm Yohay, Elam, Forex Market Movers podcast, doing the show as usual for FX Street. As usual, we'll cover the recent developments, and there was one big elephant in the room. Well, or another expression of your choice. Talk about various charts and levels now with the weaker dollar, and discuss the next 24 hours, and of course answer your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay. So the big event yesterday was Yellen's speech in New York City at the Economic Club. She went full dovish, repeating her stance from the post-FOMC decision, and contrasting all the hawkish talk we've heard since then from a few of her colleagues. Here are some of the big headlines. Caution is especially warranted regarding raising rates. Okay, so she does see the next move as raising rates, but especially warranted. This seems even starker language than what we've heard from her just recently. Okay, she expressed lots of worries about global growth. Again, markets have settled down since then. China took some steps, monetary and fiscal steps, to help the economy over there. Nevertheless, Yellen is worried. She did say that the Fed has considerable scope for more stimulus. So while she said that the next move is rate hike, considerable scope for more stimulus means perhaps a negative rate or a more QE, or if anything is open to go to the other direction. And regarding inflation, remember that they emphasized inflation in December. She said that the inflation outlook is more uncertain. Okay, and remember, this comes despite a rise in the Fed's favorite core PCE price index in the past 2 months to 1.7%, and the core CPI is actually 2.3%, also quite high. So, but she sees the glass half empty. That was also the tone of the rate decision 2 weeks ago. A few of her colleagues, including the dovish ones, were a bit more optimistic, but she reminded everybody that the doves are in control. It's not only her, it's also Bill Dudley, and there are also a few other ones. Anyway, the dollar was certainly downed, devastated, dumped. We had a dive, any other word you want with the D. Anyway, the dollar certainly suffered. Let's look at the charts before going on to other events. Okay, so this is euro dollar. It's clear to see when Yellen began talking this rise right here. So we had this pair struggling with the 112.15 line, then shooting quite fast higher, not stopping anywhere. The high, it's currently, after settling down in the Asian session, we're now seeing a fresh assault. Okay, the high for today, and actually the high since Yellen last spoke, actually in the past 2 weeks, is currently 113.12. We reached 113.40 last time, and the peak, the post Draghi peak, was 113.75. Okay, the chart isn't refreshing quite nicely, but so far it's a lower high. Okay, so maybe you can see it as a dovish move, but given the weakness of the Fed, given the weakness of the US dollar, I'm not sure this is the case. Okay, so you could draw here downtrend resistance line. Okay, but at the moment, to me, it seems that the momentum is against the US dollar. We have some events from Europe today, from the Eurozone, but anyway, so that could also, the big argument is for euro dollar and also for other currencies. Okay, the Fed is dovish, and the Fed looks much less optimistic than it used to be because of global growth, because of weakness in inflation, because of you name it, because they don't like the strength of the dollar. But wait a second, do we really see the dollar collapsing against the others? Or is the US dollar still the cleanest shirt in the dirty pile. That means, okay, the Fed isn't so hawkish like it used to be, but it's still on the path to raise rates. Look at the ECB. Look at the Bank of Japan. Look at the Bank of England with the Brexit case. Look at all around. So today we'll talk about it a bit more in depth. Soon we'll have the German preliminary CPI. A reminder that deflation or low inflation is also a big problem in the Eurozone. Okay, so I think this is going to be the debate for quite some time. Weak dollar, weak United States, but is it still doing better than the rest? Continuing £2 dollar, also here we've seen quite a rise. We managed to look how nicely the pair trades. You went above 143.65, settled above this line, and now with the fresh European morning, we're up. So far, we are meeting resistance here at 144.40. Okay, very nice patterns here. The next line to watch on cable is right here, 145.10. Okay. Anyway, currently we settled above the previous resistance line. Very similar pattern to what we've seen in this is March 11th. Okay, so about 2 weeks ago. So sort of a mirror image of what we've seen quite recently. Okay. Anyway, 143.65 support, 144.40 resistance, followed by 145.10. Further support at 142.80. Dollar yen. Okay, so also the yen is strengthening. Also here, very nice technical pattern. Now we're about to touch, we actually touched support earlier this morning at 112.20. Why is this line important? It worked here as a double bottom. Okay, even here as resistance. So throughout the month of March as support. Already yesterday, when yen, we've seen this weakening of the yen and the back of the stimulus in Japan of a new budget there. We've seen the pair reach 113.75 or a new resistance line. But since then, this dovishness of the Fed sent it all the way down to 112.20. Further support at 111, of course, the critical line, which is double, or if you wish, a triple bottom. Okay. Needless to say, the Bank of Japan is not happy with this. Japanese stocks stand out in Asia by falling. Okay. The rest of the stocks in the region, such as the Shanghai Composite Index, Australian Stock Exchange, and many other ones, are looking quite good. Okay, so only Japan suffers from this strengthening of the local currency, the Japanese yen. Moving on to dollar CAD, currently at 130.33. We're at the lows now. Remember that as far as I see it, it's mostly a big portion of this fall is just the weakness of the US dollar, because if we look at oil prices, they're not going anywhere fast. Anyway, we lost, we'll soon look at oil prices, but we fell under 131.70, which was support here in the same date, March 11th, and then once again right here we managed to break above this line when oil was weakening, and now we're back under this line. The round number of 130 works as support. I wonder why I don't have it on the chart. Here we go, back on the chart. Further support, well, we've seen the lows here at 129.30, and far lower support is at 128.30, which was a critical line many months ago. Okay, you can see the 128.30 worked as resistance, and then resistance back in early 2015, and then support in October 2015 before the huge jump. Okay, I see a question here. Think Firefox new update. Okay, problems connecting again. I usually use Google Chrome, and it works pretty well. So maybe you try Google Chrome, the latest version anyway. Yeah. Okay, anyway, let's continue. Let's talk about the Australian dollar. We mentioned yesterday, was a comment. I must admit, I don't remember who said that, but the Australian dollar could be a good candidate. And indeed it is. 76.50 is the current level. We're getting close to the highs of 76.80. Okay. Broke above this level here of 76, which I mentioned, which was the first resistance line on the way up. So far, okay, use Chrome now. I hope it works well. Anyway, we're on high ground in the Australian dollar. We did, this pair is a bit more choppy. We did consolidate here, and then we moved to the upside. Okay, next resistance is quite close at 76.80. Kiwi dollar, one of the biggest winners. Even not only did we, well, after settling above 67, not only did we break above 68.20, but we even went up to higher ground. If we zoom out just a bit on Kiwi dollar, also thanks to the better than expected building consents figure, building permits, as it's called in other countries, we're now at the highest level since October. And here we are, this 69 level is the next line of resistance. If we break above this line, we're at the highest levels since June. Okay, so that would be already 9 months. Anyway, we're almost there. Okay, so Kiwi dollar is trading in high ground. It's a bit choppy, relatively sharp moves to the upside, to the downside. It's not this classic 2 steps forward or 3 steps forward, 1 backwards. It's more going almost all the way down before going up again. So sort of widening the range each time, a bit choppy, this currency pair. Anyway, we're on high ground, 68.80 at the moment, 69 is resistance. Dollar Swiss, seeing the weakness of the US dollar, and we're very close to support at 96.40. We had a figure, or we're having a figure coming out soon out of Switzerland, which usually does not impact the Swiss franc. I would say that 99% of the move we're seeing here is related to the US dollar. Okay. Euro Swiss, the pair that the Swiss care about more, remains at the 109 handle, meaning that most of the time, with the very shallow moves on Euro Swiss, Dollar Swiss is mostly a mirror image of Euro dollar. Okay. Anyway, 110, 109 to 110, I would say is the range. Euro pound sliding back down. Yeah, the pound took a lot of advantage of the weakness of the US dollar, a bit more than the euro. This line of 78.50 is not such strong resistance or support anymore. Looks quite choppy to me. Anyway, so let's put it here at 78.30. 79.30, I still see it as a resistance, as it was the previous resistance line, and the break above it was very, very short-lived. 77.40 is the next line of support. I doubt that the strength of the pound can continue with all the Brexit talk. On the other hand, we might get poor inflation figures this morning from Germany. We'll finish the wrap-up of currencies, and then we'll talk about events for today. It's becoming busier. So on euro yen, we're at 127 at the moment. I would say 127.30 is some kind of resistance, but most of the time these currencies trade relatively close together against the US dollar. 125 is support, 128 is the resistance. Here we are at the Dragon, the Gepi, pound yen, 162.06. We had an attempt to break resistance at 162.20. High resistance, the pound, with this risk-off sentiment, enjoyed more gains than the Japanese yen. The next line of resistance is at 163.80, followed by 166, support at 160, followed by 158.50. Okay, and oil is recovering from the lows. Okay, this morning 38.85. We already almost reached 39, but still under $40. There's still too much oil around the globe, and doubts that various oil producers can reach any kind of agreement. So here we are. Anyway, let's take another look at euro dollar. As we speak, this pair continues its ascent. Yeah, 113.14 is the next level to the upside. Okay. So now let's talk about some events for today. First of all, we have, I mentioned this, so let's just talk about this briefly. The Swiss KOF leading indicator, a bit surprising to the upside, more or less remaining in place, 102.5. I don't see anything market moving right here. More importantly, this we also had in Switzerland. Before we move to the more important stuff, the UBS consumption indicator is a bit up from 145 to 153. Remember, SNB is active in markets. More important stuff that we have this morning is the one you see here at 2 p.m. European time, 1 p.m. London time, 12 GMT. It's the consumer price index from Germany, okay? Now I'm jumping all the way to 12 GMT, even though we have other events in the morning. That's because at 12 GMT, we have the final release of the German inflation figures, the preliminary inflation figures for the month of March, the month we are in right now, okay? But I'm mentioning this already now because during the morning, we already have releases from the various German states. At the moment, the only one I can see comes from Saxony, okay? So the month-over-month figure I see for Saxony is 0.8 against 0.3 last time, and year-over-year it's 0.3 against against the fall of 0.1. So the first regional figure from Germany, I think there are 16 states in the in German Federation. Anyway, the first one of them looks a bit more upbeat, but this is not a huge surprise because if we look at the figures here, we're expecting the national figure to move up from 0 to 0.2, and the HICP, the harmonized European figure, also to move a bit up from minus 0.2 to minus 0.1. So if we look only at Saxony, it implies a better than expected figure, but just a bit, okay? I mean, significantly better than last month and just a bit better than expected, okay? Last month, we had a big disappointment in the German inflation figures. The following day, we had a big disappointment in the all-European figures, and that sort of added more fuel to the fire towards the ECB. I'm sure that contributed to the ECB eventually delivering a bigger stimulus package. Just remember that despite the bigger stimulus package, Draghi's words about something like "we're done for now" backfired. Okay, so this is an important figure because it's preliminary, and we have a rate decision by the ECB also this month. No fireworks are expected, but it certainly impacts the tone. Okay, let's track back to earlier this morning. So at 11 local time, 9 GMT, we have consumer confidence. Yeah, from the European Commission, so an official government figure. It's expected to remain the same at minus 9.7, reflecting pessimism. Services sentiment, business climate. It's a few, I mean, I would look at the headline at the consumer confidence figure, but remember the German figure is more important this morning. Okay, let's continue with the slides I've prepared for today. Well, before the slides, if we already looked at this is what we had yesterday for the implied probability of a rate hike in the United States. And June, which is the next meeting with the press conference, the expectations stand on 62% against a rate hike. That was yesterday. Let's refresh the screen and see what we get this morning. This is June. Okay, so we're already up to 70%. That means significantly lower chances for a rate hike. Regarding the upcoming meeting in April, which some members described as live, Yellen didn't even use the word live meetings. Anyway, we're now at 95% against a rate hike. Okay, more events for today. Remember that, or for yesterday, perhaps before we talk about today. Remember that Yellen's words yesterday took over everything else that happened yesterday and will also remain the talk of the day today. Okay, so what we also had yesterday is the Case-Shiller house price index came out at 5.7 as expected. U.S. consumer confidence, the CB consumer confidence, beat with 96.2. It didn't move markets too much because everybody was already on the lookout for Yellen. The Kiwi building permits I mentioned before were encouraging. It's very volatile, but still gave the Kiwi just another boost after the one that it got from Yellen. And Japanese industrial output fell 6.2. Not so good, but also quite volatile. Today, as I mentioned, German CPI throughout the morning and then at 12 GMT. And the main event for today for the US dollar for everything is the ADP non-farm payrolls, okay? This is a private sector report from Automated Data Systems, the biggest payroll provider in the US. Always a big hint towards the non-farm payrolls, but not always well correlated. Nevertheless, it always has a strong impact on markets, even though, and impacts also the expectations for the non-farm payrolls on Friday. So let's look at here on the FX Read calendar. Here we are, the ADP employment change. This time we're expecting a gain of 194,000 jobs, a bit less than 214 seen last time before revisions, of course. So this time we're getting the figures for the month of February. For the month of March. Sorry. So for the month of March, which hasn't ended yet, but we already have the survey out there. As you can see, since the financial crisis, since 2010, it's been more or less stable, becoming more stable in recent months, hugging the 200,000 level. Private sector employment is bigger than public sector employment, okay? So this remains key, of course. All right. Let's continue. What we won't get here is, of course, the wages. We'll have to wait for the wages for the official NFP release. Next up, we have, as usual, on every Wednesday, every week, we have the crude oil inventories. Last week, they jumped quite a lot, and that hurt oil prices, which were elevated. This time, we're expecting only a third of that gain, of that buildup. Instead of 9.357, we're expecting just above 3 million. Okay, it's still a buildup. Oil inventories are still the highest levels in 80 years or so, since the 1930s. Okay, so these are the main events for today. Yeah, and I'll just, overnight we have New Zealand Business Confidence. It's already out of our usual session, but I mean, that's already night time. But anyway, last time it stood on 7.1. And we have a few other figures from Australia and New Zealand, which are not, I would say, not top tier. And just to mention that tomorrow, before the show, we have German retail sales at 6 GMT, and that could impact the open. Of course, we'll talk about that tomorrow morning, as well as we have French and Spanish figures, the Spanish HACP, also the year-over-year inflation towards tomorrow's bigger figures. But we'll leave that for tomorrow. Okay. Any questions for now? Anyway, we're currently in a state where the US dollar is suffering. It suffered yesterday, it consolidated in Asia, and now this suffering continues. Janet Yellen, as I aforementioned, went all the way to the dovish side. So here we are. We're seeing euro dollar tick a bit higher. Well, let's add this line here. This is the line we've seen. Actually, yeah, as I said before, the previous public appearance by Janet Yellen, we reached a high of 113.44. Okay, any questions? I think that a few of the regular guys are missing. Perhaps they were confused by the hour, but I'm sure we'll see them back tomorrow. Newbies and veterans are always welcome, of course. Yeah, let's talk about other events we have this week and we'll have going. So yeah, Monday, remember that was Easter Monday. It seems a long time ago after this speech by Janet Yellen, but we had thin liquidity. We had the US Core PC price index that came out a bit slightly worse than expected, but still showing relatively healthy inflation at 1.7 on the core. Yesterday we had consumer confidence basically ignored and then Yellen killing the US dollar. Today, German CPI critical. I think if the euro could continue advancing against the dollar or not. The dollar is weak, but will the euro take advantage? A lot depends on German CPI, and then on the ADP NFP, and of course the oil inventories. And tomorrow we have a follow-up of the European inflation figures because we get the full Eurozone inflation figures. Last time they followed up on the German ones, and they were also as terrible. They showed that the Eurozone fell back into deflation, a fall of 0.2. Let's see if we manage to balance it out this time and rise back to zero on the headline figure, and if we have an improvement in the core number. We also have a speech by Mark Carney. It's impossible for Carney to avoid the Brexit talk because it certainly impacts the Bank of England. The Bank of England does not want a Brexit. They can't say it really out loud in this manner, but they certainly oppose it. Canadian GDP is also released. Let's see if how this impacts the recovering Canadian dollar. Again, mostly on the weakness of the US dollar. On Friday, we have the Chinese Purchasing Managers Indices coming out, giving us a view of the world's second largest economy. Current situation is that both of them are showing contraction in the manufacturing sector, just under 50 points, but the Chinese government, Chinese authorities have pledged at least 6.5% growth. The People's Bank of China cut the reserve ratio rate to another half percentage point a month ago, so the Chinese authorities are certainly making an effort to stimulate the local economy. Let's see if it's reflected also in this forward-looking figure. We have one from the government and one from the independent Caixin institution. And last but not least, of course, the US non-farm payrolls on Friday as usual, the first Friday of the month. This time it's April 1st, April Fool's Day, but I'm sure it will be a serious report. What's different now from previous NFPs is that we don't have a full buildup, okay? We'll only get the ADP non-farm payrolls today. We do not have the ISM manufacturing PMI, which was negative a few times, and we will not have the ISM non-manufacturing PMI, the services sector one, which is of course much bigger. Okay. Comment here. I think that that's it for now. Was orchestrated with the Fed for FX and stock market manipulation because the talk is cheaper than actual hard FX intervention. Well, first of all, I agree the talk is cheap, and central banks will do whatever they can to intervene verbally before really taking action. Now, yeah, there is some talk in markets that the dovish tone struck by the Federal Reserve is a result of coordination, perhaps coordination in the G20 summit back in China in February. Okay, that the move by the ECB, which was already on the cards, got an extra boost in that meeting. also the Chinese moves, also the Bank of Japan's, but most importantly, that the Fed's surprisingly dovish tone came because of coordination. Okay, I read this on Forex Live. That's Adam Budden's opinion. We've seen it also in other places. But the Fed's dovish tone could be just in order to mitigate a strong dollar across the board. Could also be a genuine fear. Could also be something that the Fed knows that we do not know. For example, they were talking about soft investment. When that came out, the figures were actually quite good regarding, if we looked at GDP, if we looked at durable goods orders. Since then, we had a weak core durable goods orders release, which reflects really soft investment. So did they know or did they estimate? It doesn't really matter. Okay. Also, another thing I suspect is that Yellen's speech yesterday was not only in order to weaken the dollar, not only her genuine thoughts about the global economy and inflation, but perhaps she already knows something about the NFP report on Friday. Maybe she knows that wages remain stuck or even low. Okay, they do get the figures before we do. They cannot get all the figures before we do because it takes time to compile the data, and their forecasting skills are quite limited, to say the least. But it is possible that they did get the non-farm payrolls report already yesterday or on Monday before we get it on Friday. So you can take that dovish speech and perhaps say, okay, this implies a weak non-farm payrolls report on Friday, especially regarding inflation, which is the point Yellen emphasized, right? Yesterday, and also even back in the rate hike decision in December, she emphasized, the Fed emphasized how inflation is an issue. So, and of course they're frustrated with wage growth. Everybody is, because, we're seeing growth in the United States. We're seeing growth in jobs. Some Fed members even talking about full employment. But when there's full employment, you expect to see pressure on wages, right? Because it's harder for employers to find workers, so they raise the wages in order to attract better people to the jobs they're advertising for, right? So, and we're not seeing it now. We haven't seen it in quite some time. It's very frustrating for the Fed. So I suspect, once again, we can suspect a few things. First of all, the Fed has information we don't. That's reasonable. Secondly, it's a coordinated monetary stimulus. Perhaps also in light of the Brexit. Remember that in that G20 meeting, the finance ministers and central bankers, we heard many people talk about Brexit. We also, it became a global issue. It became from a local British, a problem for the Tories within the right-wing part of their party, the Eurosceptic part of their party. They went for this referendum, and it became a European issue, and now it became a global issue with Christine Lagarde, head of the IMF, and other senior members warning about the impact of a Brexit for the global economy. Okay, so that also could be sort of all these moves could also be part in order to soften the blow. Okay, there are many theories, because once again, the data in the United States is not that bad. It does not justify an extremely dovish tone. Not on inflation. Inflation looks better. Not on jobs. Not on the global economy. Things have settled down. Okay, so yeah. Another question here: why does the United States market always talk in fractions and not decimal? They are behind the curve on that. Well, if you look at Yahoo Finance or things like that, you do see in many cases the decimal points. I think that's something quite historical. Before they had calculators, remember the U.S. stock exchange is quite old. It began somewhere in the 19th century. I don't have the exact date. There are a few differences in Also, in economic indicators, you have differences between how various countries report the data. The United States makes everything annualized. That means multiplied by 4. Growth rate is annualized. Other countries look at either quarter over quarter or year over year. Well, the United States, they use miles, ounces, and pounds, and not kilos, meters, and things like that. But yeah, I guess it's a cultural thing. Anyway, other additional questions? Let's look again at the charts. Yeah, we had 2 days of beginning the show in a different hour. I mean, the same hour GMT, but a different hour in terms of London and European Central Time. We're now back to the usual hour, which coincides with the stock market open. We're seeing extended gains here on euro dollar, 113.25. US dollar sell-off extends. Next line to watch is 113.44, just because it was the post-Fed high just recently. I would look a bit more serious line for me is 113.75, because it worked as support and resistance several times. Most recently was the high level seen in mid-February, before things began improving in the global market, in the global atmosphere. The better than expected US retail sales report later revised to the downside, but it doesn't really matter. Anyway, 113.28 is the current level. The current high, 113.25 is the current level. The same thing we're seeing a move up, an attempt to break above 144.40 in pound dollar. Look how this line worked as resistance. Now we're above this line. Okay, the next line of resistance is 145.10. Dollar yen attempting to break under 112.20. So as we speak during the show, we're seeing attempts to break to lower ground. For dollar CAD, there's still some distance to the round number of 130. Aussie dollar is also moving, not yet attempting to break, but very close to resistance at 76.80. Okay, let's see if we have a break. And Kiwi dollar, what a move. It made a move above 69, but it's currently at 69.35. So yeah, I was talking about Yellen's impact, and this impact is just becoming stronger. Kiwi dollar certainly stands out this morning. We're currently at the highest levels since June, a significant breakout. I wonder how much time it'll take for the authorities in New Zealand to begin complaining. Let's also look at oil prices, a bit higher on the day, but it's oil prices, I can't say they're, I would say that oil prices are now lagging and Forex is leading. Okay, so very significant moves across the board. Okay, dollar weakness is certainly the headline of the day. Any more questions? Any more currency charts? Good morning, everybody. Back from the Easter holiday, and currencies have a lot of energy, except the US dollar, which is lacking. As I speak, the yen is strengthening a bit more. I'm sure the Bank of Japan is frustrated. We're under support at 112.20. Seen working as resistance earlier in the month, last week. Regarding Japan, it's important to remember that we're at the end of the fiscal year. The fiscal year in Japan ends actually in the first quarter, which is just now. Tomorrow is the last day of the fiscal year in Japan. So there might be also last-minute adjustments here that impact markets. We'll see it more in force tomorrow. More in force not only in Japan, but in other areas, especially around the London fix tomorrow. Tomorrow is the last day of the quarter. a very turbulent quarter that could imply a very turbulent end, sometimes irrational moves just in the scramble to the last hours to the fix of the quarter, and then perhaps a return to normality just afterwards. Okay. Okay, so let's get to the wrap up for today. This is the wrap up for the live market open for March 30th. We're seeing a very clear move in markets. The dollar is down. That's because Yellen went all the way dovish, repeating her stance from the rate statement, but contrasting what her colleagues said in the follow-up to that statement. We're seeing, she said that caution is especially warranted. She expressed more worries about global growth. She sees them as worse than beforehand, that there's considerable scope for more stimulus. Even though the next move is up, she did open the door for changing direction, going, cutting rates perhaps, without saying that explicitly. And that the inflation outlook is more uncertain. This comes despite the fact that inflation figures in the United States have improved, let's say, since December. The dollar was hit quite hard in the immediate aftermath. It was yesterday afternoon here in Europe, and then in the US close. In Asia, things settled down just a bit, but the dollar sell-off resumed this morning. Here we are, as we speak, new highs in euro dollar, 113.30. Next level to watch is 113.44, which was the high that the pair reached just after the previous appearance by Janet Yellen. Next resistance, 113.75. Support at 112.50, then 112.15. Cable making an attempt, let's see if it's real or not, to break above 144.40. Next resistance, 145.10. Support at 143.65. Dollar yen breaking under support at 112.20. I'm sure the authorities in Japan don't like it. 112.20, if confirmed, turns into resistance, followed by 112.83. Support is at 111, very strong support line. Dollar CAD almost there as we speak, reaching 130, the very round number. Further support 129.30 and very strong support at 128.30. Resistance at 131.70. Aussie dollar, yeah, just broke resistance. Thanks for the comment. I was busy talking and I didn't see the comment. Anyway, thank you very much for noting that out. We've reached 76.98, just under the round number of 77. I would not be surprised if we ever break above that. Anyway, we broke above the levels we've seen 2 weeks ago around the Fed decision at 76.80. And the next line of resistance, I think, is only 77.40. Okay, very nice moves. Australian dollar is one of the strongest ones, as Jake mentioned here. As Jake mentions here, it's strong also against the pound and the euro. Okay, and another strong currency, even stronger than the last time I looked, 69.53 on Kiwi dollar, hitting for the sky, big breakouts. Next level is the round level of 70. Okay, so this dollar sell-off certainly extends this morning. Okay, big moves. Let's talk about upcoming events for today. We have this morning at 12 GMT the German CPI. It's the preliminary read for the month of March. It comes on top of regional releases throughout the European morning. It could come out a bit better than expected according to the very first numbers we had out there, but nothing is certain. At 12:15 GMT, we have the ADP non-farm payrolls for the private sector, a significant, and this time the only hint towards the NFP. Crude oil inventories, oil is a bit lagging behind in comparison to the big moves in the US dollar against the US dollar. And worth mentioning, if you're awake at night, the New Zealand business confidence with the soaring Kiwi. Let's see if it gives the pair another boost or halts the rally. And before the show, worth mentioning tomorrow, if you wake up early, German retail sales. Okay, so we have Traders certainly coming back to markets with full energy. Yellen coming with full energy, a full basket of worries, hitting the dollar quite hard. Anyway, that's it for the show for today. Wish everybody a safe and successful day in the markets. We'll be here tomorrow at the same time. It's 7 GMT now with daylight savings time, 8 in London, 9 Central European time. I'm based in Barcelona. Okay, so we're back to the same times for Europeans, just different time in GMT because it's springtime, almost summer. Okay, so that's it for today. See you tomorrow. Thank you and bye-bye.